Welcome to one more awesome episode of Tuesday Technical Talk. Today's topic is exit strategies. Now, this is my favorite topic, and many people have been asking about it. And this is the main challenge with most people in stock markets or trading or technical analysis. You easily get the entry, you easily get the in Hindi say kya kharidna hai, kahan kharidna hai. But the most important part is the exit part. Most people fumble or they are not clear about it. So let's put these things in play. Whether you are a short-term player or a long-term player or a medium-term investor or a day trader, these are the different types of exits which we are going to discuss, and then you can follow the same for your trading, right? Make sure you have your exit plan ready before you enter a single trade. Any single trade, whether it's a long-term, short-term, medium-term, okay? So let's start with the types of exits. The first one is called initial stop loss. Initial means when you have your first stop loss. The reason why you are buying the stock is the stop loss. Like if that reason goes away, then you have to exit. The second one is called the trailing stop loss. Trailing means once you're in the money, when you're making money, how do you trail your stop loss upwards towards the target? Then there is a time stop loss. This is very common. That is very important. Sometimes you take the trade, it doesn't move for a few days and you keep holding, and your time is blocked, your money is blocked, your mind is blocked. So you need to have a time stop loss, event-based stop loss, monetary exit, and psychological stop loss. So all this stop loss I will explain and with examples. So let's start with the first one called initial stop loss. Initial means why am I buying the trade? Let's say I'm buying, the reason for my buy is 40 support and there is a green candle on that. So I'm going to buy. So what is my reason to buy? Because of the 40 support and because of the green candle. So my stop loss is the low of this green candle. That's my initial stop loss, right? So let's put that in buy. And that's my initial stop loss. Now, when I buy here, this is my initial stop loss. I should be ready that there should be a potential to make more money than this, which is the initial stop loss, let's say 10 bucks. So if it goes above, it can be 20, 30. So that's we call as risk reward ratio. 1:2, 1:3, 1:4, whatever it is. Like for short-term trading, it can be less. For medium to long-term trading, it can be more, like 1:5, 1:10 also. So initial stop loss is the reason for your entry. If the candle low breaks, if 40 breaks, you are out, right? So let's talk about, and then it moves up. So let's have this on the chart. Here we have the same stop loss, 40 support and a green candle. So we can have an entry here and we can have a stop loss here. That's the stop loss, and then it goes up, right? Now otherwise it would have gone down, it would have triggered your stop loss. So look at the risk reward ratio versus risk versus reward is like 1:3, 1:4. That's your initial stop loss, right? Entry. Now let's look at initial stop loss on the downside, like when you're going short in the market. So you have this one, says entry when you are at 60 resistance, you're going to short below the low of this, and that's the entry. Now what is your reason for your entry? Is this candle. So we'll put a stop loss above the high because this is the candle where RSI resisted 60. So that's my initial stop loss. And then niche there will be on the downside there will be a target, right? So that's why it is important to have initial stop loss very clear, that why am I buying the stock? If the reason for that stock or of the reason for that trade goes away, I need to be out of the trade. So that's my entry, stop loss, and then it goes down towards the drain. So let's talk about this is called as initial stop loss. Like now talk about trailing stop loss. Trailing means when you make money. Once the market says you are right, then you need to change your stop loss. So let's take an example again. We bought and then it goes up. That's your initial stop loss. Now market says you are right. You change your stop loss to trailing stop loss, last candle low. Then it says one more, trailing stop loss number 2. So earlier my stop loss is here, then second here, then third here. So I'm protecting my profit. Now market says you are right. You are making money. So why should you lose money and hold on for such a big fall? So you'll keep changing the stop loss upwards to take the maximum out of this. Trailing stop loss number 3, trailing stop loss number 4, and that gets triggered. So that's how I'm protecting it. Now it depends on if you are especially into day trading or short-term trading, you can trail your stop loss this tight, like every candle. If you are like a medium-term investor, you can even have a stop loss 3 candles, the last 3-day low or something, what we call it. The rule of 3, which is also very popular. So this is called trailing stop loss, right? So let's look at more examples on this as we go ahead. Now this is the real example. Let's say there's a breakout. You buy and your stop loss, right? That's your initial stop loss. Then it goes up, trailing stop loss 1, trailing stop loss 2, trailing stop loss 3, and that get triggered. So you protected and you made money. Now remember, every time remember that you are never going to sell at the top. You never know it is the top, right? So you'll have to keep continuing. That's called trend following, right? And I think that only way to make big money is trend following. Now let's talk about the stop loss buy on the short side. If you go short, initial stop loss goes down and you keep changing the stop loss 1, 2, 3, 4, and then gets triggered here, right? So this is on the short side. If you are shorting the market, trailing stop loss 1, 2, 3, and 4, right? So that's your trend line. It's a break, short, initial stop loss, first trailing stop loss, second, third, fourth, and got triggered. So that's how you protect your profits in a downtrend when you are short in the market. So now we understood initial stop loss, we understood trailing stop loss. So let's talk about time-based stop loss. Now time is very important, especially when you're trading futures, or especially even when you're trading options. You are bought for a reason, but the market does not move for 5, 6, 7 days. That means you are locking your locking your capital, locking your mind, and other opportunities also missed out. So I can say that, okay, I'm buying this. Let's take an example here. See this one. Keeps moving sideways. Keeps moving sideways and ultimately actually breaks when you take a support at 40. So I can have a stop loss of five candles. I follow this 5 to 6 candles. If it does not move for the 5 to 6 candles, let's say I'm taking on an hourly, then 5, 6 candles. If I'm taking on a daily, 5, 6 candles. On a weekly, 5, 6 candles, depending on that time frame. So once it does not move for that much period, I'll get out. Neither the stop loss is triggered, neither the target is met, but I'm wasting my time because it's supposed to be a momentum trade. I want to shift to other positions, other trades, right? So that's your time stop loss. You can take a standard rule of 5 to 6 candles, right? Next comes event-based stop loss. There are so many events, and there's something called as minor and major events, or major and minor events. So let's say there is an event like budget tomorrow, or an election result, or a major announcement, or a Fed meet. So let's talk about the major events. What are the major events? Budget, elections, global events like Brexit, or something like COVID which happened, and surgical strikes, or war, or lockdown announcements. All these are major events. So should I carry forward my position on a major event? It doesn't matter whether I'm making profit or my stop loss is not triggered. Just because there is an event, I want to get out, right? So that I'm protecting if the event goes in the other direction. And some of them are announced in events. Like I know budget is on this day. I know election on this day. Some of the things are natural, or a war or a strike is not known in advance, or natural calamity. Then you can't do anything about it. But at least when I know there's an event coming up, I need to prepare for it. Right? Ideally, I would not have any positions on event, or I will have a hedged position with options, or I will have only options position so I don't lose much money. Right? So that's the major event. And let's look at the minor events. Quarterly results, monetary policy, IIP data, Fed meets, government announcement. All these are minor events which keep happening every 2-3 months. So how do you differentiate between major and minor? Major is something which happens once in a while, which is rare. Minor keeps happening every 2-3 months. You get quarterly results. So if I'm holding a position in an XYZ stock and the result is coming up tomorrow, quarterly, then I have to tighten my stop loss. I have to change my stop loss. I can exit. Right? So that's called event-based stop loss. Right? Monetary exits. Now this is also very common, especially when it comes to short-term trading. What is monetary exit? Is either you take a daily target, weekly target, or monthly target. So let's take, okay, my daily target is 10,000 bucks, I'll exit. Doesn't matter the target or the support or the resistance. I made 10,000, I'll get out. Or 20,000 or 50,000, whatever it is. Or the weekly target. Okay, I trade for 2-3 days and I said, okay, I achieved my target, 50,000, 1 lakh, whatever it is. And I'll say, okay, now I'm not waiting for the support or the resistance or the candle pattern or something like that. Or the monthly target is also the same, right? So one is the monetary targets in terms of period, which is daily, weekly, monthly. Or it can be on the period on the basis of fixed percentage move. Like I get intraday, if I get 1 or 2%, I'm out. On a swing trade, I get 4 to 5%, I'm out. On a positional trade, if I get 10 to 15%, I'm out. That is a monetary target. Or it can be number of points. Like say Bank Nifty, I get 200 points, I'm out. 500 points, I'm out. Or I get 10 rupees in Tata Motors, I'm out. So either point wise or percentage wise, you decide. Or it can be like a partial, like ideally what we do is when you have a positional trade, and I know that can go a long way, but I will book, say, 25% of my position at 10% profit, 25% of my profit at 20%, and then balance I can trailing stop loss. So I can use a mix of stop losses also together. Like I use the trailing stop loss, partly I use the monetary stop loss. So you can mix and match also. So this is my monetary stop loss method of doing this. And of course, there's a psychological stop loss. Like suppose you have a good position going on or you're trading well, but there's some issue in the family, like you have someone not well or medically sick, or something has happened in your family, some kind of fight or argument, or you're not in the best of your mood, or you are not well. When you see, trading is mind game, right? So if you are not 100% on your mind, they're not fit to trade. Like for in cricket, let's say there is a small injury on one finger, let's say of Virat Kohli, and then he says unfit to play. Now, trading is a mind game. If your mind is somewhere else for financial loss, emotional loss, relationship loss, or a person loss, or the health loss, then you're not fit to play. So I'll say, okay, I'll exit all my positions and take a break and then come back. Or it can be other way also. You're very happy, or you're going for a long trip or a travel trip, and you say, okay, I'm going out for 5 days. I don't want to take any positions, carry forward any positions. I just exit all positions and then enjoy the vacation and come back and then take the positions. So that's a psychological stop loss. Right, so I hope you enjoyed all these types of stop losses: initial stop loss, trailing stop loss, time stop loss, monetary stop loss, event-based stop loss, and psychological stop loss. And if you have got some aha moment, if you have learned something from this, put that in the comment section, and also let me know which kind of topics or what topics you would like to see in the future shows and future episodes. And thank you so much for all the love and support, likes and subscribes and shares. Good luck and good trading. I'll see you in the next episode. Thank you so much.